All right. So now they're at 6,800 directionally. Do you agree with that? That after the Fed rate cut, there's more upside for the market in this calendar year. And does it also extend to next year? I think that's the question a lot of people are trying to figure out.
I think it does. I think the extension into next year is absolutely there. We have two major catalysts playing out right now. One is the Fed rate cut with expectations of more to come, and that should extend the economic cycle. And the other is earnings have been surprisingly strong last quarter, looking for more of the same this quarter. And part of that's built on a long-term theme around expanding margins. And so I think there's some long runway to be had there. Perhaps the next couple of weeks, it could be in a little bit of a holding pattern until we wait and start getting some of those earnings reports in a few weeks. Wait till we see what the setup looks like going into the next Fed meeting. But longer term, I think there's a couple of powerful trends in place.
All right, so powerful trends in place. By the way, we're showing right now that tech, financials, and communication services, they're all at record highs. So I think the other question a lot of people are trying to figure out, how does this market move higher? Does it move higher with tech, or does it move higher through a broadening, or is there some other combination of plays that makes the market move higher? When you're talking to clients, where are you advising that they put money for the most upside from here, at least through the end of the year?
Yeah, so the two areas that we find particularly compelling are sort of opposite ends of the spectrum. And it makes sense, though, if you think about those themes. So you will get some valuation support for large cap tech. There is potential for more margin expansion there. So that large cap growth space we expect to continue primarily on the basis of fundamentals. But we have started to see a broadening the past few weeks. The Russell 2000 has picked up in returns this quarter. And you're seeing a few catalysts that will allow those gains to spread to small cap. The interest rate backdrop had been a real headwind for small caps. That's reversed itself and is starting to improve. Seeing deal activity pick up. And I think some of those margin gains extend to small caps as well. So both areas look particularly compelling.
Okay. We just hit on some of the big banks that are bullish. You seem very bullish. What do you make of today, what we're seeing, this action in the pre-market? Gold's up about 1.33%. And we're seeing what a lot of people would consider riskier assets, cryptocurrency selling off in the pre-market. A lot of people last week said it was, quote unquote, risk on. It's time to take bigger bets in the market, maybe higher beta bets, more higher volatility bets. But today we're seeing a trend that's moving in exactly the opposite direction. People piling into gold, getting out of cryptocurrency.
Yeah, I think it's right to be a little bit cautious in the short term here. Part of that is there are concerns over valuation. I think valuations are mostly justified at these levels, but there's no denying that stocks are pretty expensive here, top 8% or so per our calculations over the last 30 years. And then you have sort of this information vacuum over the next few weeks. The two biggest trends, I think, really are the Fed and earnings, but we won't be getting any new news on those for the next few weeks. So most of that's priced in at this point, and I think we're at a little bit of a holding pattern until earnings season gets underway in earnest.
Well, Robert, I got to correct you just a bit. We do have PCE coming up. So you're saying you don't see that as a market mover any longer? Because we seem to be getting these indications from the Fed that they're more focused on the labor market. It's not that they're not focused on inflation, but just considerably more focused on the labor market.
No, it's a great point. I absolutely think all of those economic data points, particularly around inflation and the job market, are going to shade expectations as to how the Fed acts at their next meeting. I think the real catalyst will be, is there another cut coming? Are there another 2 cuts this year? But you're absolutely right. The thing that could derail this market is if you get any outsized surprise, particularly on the inflation front or downside on those job numbers. Those are the things to watch in the interim.